Hi there, you're watching the daily edition of Your Trades on 80 Now. This is Priyanka Koppal along with me, Shriyansi. Today, the market showed off a smart recovery. Shriyansi, sorry to say, but not your color. I think it reversed the initial losses. We opened at a day's low, but then closed at the highest point of the day. Nifty came off in second half, Bank Nifty, mid-cap index. In fact, there was a smart and steady recovery which we saw on the benchmark indices, and they've closed at the highest point of the day. Bank Nifty, in fact, recovered nearly 800 points from its day's low, all led by gains led by ICICI Bank, Kotak Bank, HDFC Bank, and some of the PSU names as well. So very smart recovery. And of course, there was a recovery which was seen in Asian markets also, which was trading, in fact, which opened with the deep cuts. But Nikkei also recovered. A significant pullback came in from global markets, and so did we. Also started recovering from the second half of the day. Sectoral moves, if you talk about the top gainers at the top notch, the top spots were FMCG, consumption, defensive names. They notched the top spots here. But then the sectors which were dragger were majorly the PSE space, CPSE space, which is down nearly 2%. You talk about IT stocks, metal, energy. They were the top draggers today. Talking about the gaining stocks, a couple of the brokerage notes that helped the stocks gain the momentum on the either side. Shriram Finance was the top gainer. There was a note by UBS. That's what the stock reacted. Other than that, we saw a lot of excitement and movers coming in from consumption space. Stocks like Britannia, Tata Consumer, even life insurance counters ahead of the GST Council meet also. On the losing side also, the top losers were ONGC. Again, that was on the back of a brokerage note. Citi downgraded the stock, and of course, let's not forget the way crude is consolidating at lower levels. We've seen from many weeks now. Now it's nearly $72 per barrel. That's one reason that Citi has also cited in their report that going forward, their EPS estimates has also been cut down, and that's what the stock reacted very sharply today, down by nearly 3%. IT names did not participate today because we saw clearly technology stocks have been a dragger overall also, globally also. If you talk about the Magnificent Seven, we talk about the US stocks, although the rally has stalled there also. So was with IT names here, Tech Mahindra, Wipro, they were the main draggers today. And not even just the IT pack, in fact, metal, energy, a lot of metal names, of course, commodity on the fear of the slowdown in China and US both, and that's what we see the move in Hindalco, Moil, Nalco, Hindustan Zinc. A lot of stocks were dragging with the deep cuts today. But then the brokerage note cheered Zomato stock also today. Jefferies has come up with a note and they talk about their interesting initiative, and hence they see a 20% CAGR. What did you see?
Well, absolutely, yeah. That just about sums it up in terms of the market move. But when we take a look at other stories that we're keeping on our radar, we do have SpiceJet. Now, SpiceJet, of course, there's that announcement coming in. And you did see shares of SpiceJet surging about 4%. They ended the day in trade with an uptick of about 4% coming in for SpiceJet after the company announced plans to issue shares to Carlyle Aviation as part of that restructuring deal coming in to convert a portion of its dues into equity. So that's an important update coming in right there for SpiceJet. When you take a look at other stories that we're keeping on our radar, of course, there's a couple of important stories now. There's an ET9 exclusive, and India's newest startup airline Fly91 also aims to add 32 ATR aircraft in next 5 years. So that's an important update coming in right there, and we'll of course be playing up a conversation, an exclusive conversation at that later in the show as well. And the government is also likely to sell stake in 3 to 4 PSUs in financial year 25, and that's also a source-based story that we'll be getting you more details on. But largely it's a small stake sale through an OFS route, and that is the update coming in there. But for now, let's also take a closer look at the action that happened in trade today with Shivangi Sarda, analyst, equity derivatives and technicals, broking and distribution at Motilal Oswal Financial Services. Shivangi, hi. Tell us what you really made of the move today then.
Absolutely. So we've seen that, Nifty index, even though it opened slightly flattish, recovery has been seen, and 24,750 was seen as a base here. And we've seen that the bulls have been active at the support zones, which clearly indicates that these dips have been utilized well. Also, the volatility index has come down by around 6.5% from the recent high. So overall, bulls are getting comfortable at these levels, and there is a good amount of pullback move in the banking index as well. So this clearly indicates that some, the underperformance streak is to break here. Of course, with the heavyweights like ICICI or Axis for that matter have been witnessing short covering move today. So overall, we are witnessing a good mixed bag of buying. So we are expecting the next levels to watch out for Nifty, which will be 24,150 and 25,150 and 25,250 marks, with a support of 24,750 zones. Now, levels to watch out for Bank Nifty would be the next hurdle, which is at 51,750, with a support of 50,850 levels.
Thanks so much for joining in, Priyanka this side. Also, do tell us, and since you mentioned that there was a bout of short covering what we saw today, but are we out of the woods, or is it a small recovery what we saw today? Because the fear and the concern, the global factors, they remain at the bay, and of course the kind of FIs they've been selling in index and stock future. Has everything come to a halt now, and it's time you would be a buyer at these levels?
Hi, Priyanka. Thank you for having me. So, we've seen that somewhere Bank Nifty has not performed from a really long time. And today, I think, out of the blue, we've seen that Bank Nifty has outperformed the Nifty index. So definitely there is some sort of buying happening over here because usually when there's FIs buying, it's usually in the heavyweights banking stocks as the first, preference. And then there is FMCG, which is moving. So FMCG is also a favorite pack for the foreign investors. So, all this indicates that somewhere the foreign players are finding out opportunities to buy at these levels. The retail has been quite strong, the inflows. And overall, we are seeing that, mid-cap and some of the selective sector-specific action can also be seen. So overall, it'll be interesting to watch out the sectors. But of course, FMCG, some of the insurance names, particularly in the banking and non-banking financial space, will be interesting to watch out.
That means you would be in a wait and watch mode and you would be buyer in selective spaces only. So what are the two recommendations that you would put forward here for our viewers?
So my first preference would be from the FMCG space itself. We're talking about HUL here. And stock-wise, we've seen that good amount of longs have been started to add up in this counter. Today itself, we saw the 10% open interest addition over here. And the way it's given a breakout on the weekly basis, consistently moving from the last 11 weeks, a good support-based buying. So now the stock is set for a new, fresh, price territory. RSI is also showing positive divergence here, and the stock is, all set to move higher. So recommending a buy here with a target of 3,050 and a support near 2,870 levels. And the second pick would be on TBZ. Now, some of the gold prices movements are acting up over here and benefiting these companies. And one such company is this one. Moving from the last 13 weeks and consistently, we've seen that there has been good follow-up action after the breakout of the monthly zone as well. Volumes have been adding up from the last few sessions over here, and good amount of sustenance at the higher zones can also be seen here. So definitely the stock is also set for a good up move. Recommending a buy here with a target of 280 levels over here and a stop of 263.
Recommendation coming on HUL from Shivangi there. Thank you so much for joining us, for taking time out and joining us, Shivangi. Moving on then, let's get to the word from the wise. And with the current bout of selling seen across markets, will Indian equities see another round of outperformance, or will the risks weigh heavy this time? Let's hear out opinion coming in from Macquarie's Sandeep Bhatia then.
The global markets are waiting for various risk events to play out. The big risk event is the US election, and how the US behaves in the run-up and what kind of policies are unveiled post the election of the new president. So that is a big event. I think the markets, therefore, globally will remain very choppy and volatile till the elections are concluded, and maybe even later. As far as the Indian markets are concerned, we are in a zone where earnings growth has essentially stabilized. We would not definitely see major earnings surprises going forward for the next 12 to 15 months. India has to continue to grow steadily and continue to outperform the markets. In that situation, the underlying trend for the Indian market will be decided by domestic flows. If domestic flows are stable at the rate at which we are seeing them for the last couple of months, Indian markets should hold up. But definitely it will be buffeted. The Indian markets will be buffeted by what's happening abroad. And I definitely see risk coming in from global markets.
Okay, all right, that's a word coming in. Of course, there's a gush of liquidity that's lending the resilience for the Indian markets also. But now, is it turning out to be a sad September for global market as well, as the street continues to see deep cuts? Decline is declining every session this month. But is the Dow Jones set for a reversal soon, especially with the yen strengthening against the dollar once again? Kunal and Nikunj have some charts to take us through. Let's get you that interesting research.
Talking about the biggest mother market, which is the Dow and S&P. If these two indices, if they reverse, what impact and implications it will have for equity in general and emerging markets in specific? So Kunal, Dow was not the first port of call as it is. Dow has been the sideshow. It's good to know Dow, it's good to track Dow, but Dow in a sense has not really been the harbinger of what the global action is.
Yeah, for a fair degree, yes, Nikunj. But you know what's actually happened is that there are two charts for Dow which I have showcased today. One is the short-term correction. This is the chart
explain the chart for us, what it means.
Yeah, so the lower grid of the charts is the Dow prices over the last 1 year.
The one at the below, the one which has a candlestick in it.
Correct. Okay. And the one which is on the top is the stochastic oscillator. Okay. Now, why I've mapped the oscillator? Because it tends to give you the signs where the Dow is going through a corrective wave or a fresh corrective wave has started off. In the previous 3 cross downs, which is
ABCD.
That's ABC.
Okay.
We've seen that Dow gets in, or the indicator gets into a corrective phase. Dow, from there on for the next 2 to 3 weeks, gets into a mild correction. Mild, I call it because it's just about some 3 to 4% corrective wave. We have come back to the point D, for the Dow, which means we are into a very similar zone of a potential correction, 3 to 4% over the next subsequent few 2 to 3 trading weeks.
Okay. So are you making a case that Dow will fall and India will fall, or this could be an independent fall?
Yeah, this could be a corrective wave which is spanning across the globe. So I checked the charts for European indices, I checked the charts for US, Nikkei, global markets, emerging Asian markets. All of them are showing a very similar synchronized kind of a price action. What's leading this corrective wave is this chart, which is the Japanese yen chart, the dollar to yen chart, and we are back again to that 142 mark for the yen, which we got a first scare in the month of August. We are almost very close to highest appreciation for the yen on a YTD basis. So we are very close to that 2024 highs for the Japanese yen. This could be another concern which the markets are suddenly trying to price in, and that's one of the reasons why I would probably believe that we are going to a trend which is very weak, potentially over the next few weeks.
I have a limited point on yen, but just to wrap it up just with my thoughts here is that market never reacts to the same thing twice. So I think the yen carry trade, in a sense, markets know that at 140 what has happened, so markets in a sense are prepared for it. What I'm finding different, not on the Dow part here, is that the historical correlation of weakness in dollar index and strength in commodities is not translating into in reality. Yes. So that's, I think, is a big departure, if you frankly ask me, where the puzzle in the world continues. So that is the $1 billion or the $1 trillion or the $1 million question, Anisha and Avan, which is that if historical patterns are anything to go by, I think Kunal feels that Dow is on a verge of correction. But if that happens, are we looking at a crack in commodities further, or the weakness in dollar index which gets triggered because of the correction in Dow could actually be a good buying opportunity? We'll only figure out in the next couple of weeks, but I think interesting correlations are at play right now.
Priyanka, it does look like a short-term reversal is on the cards for Dow Jones, but with that, let's also take a quick break. When we come back, we'll take a look at how the derivatives roundup is shaping up, so you don't go anywhere.
Welcome back. You're watching Your Trades, and now on action from the derivative space. The trend seems to be changing, at least post the second half. What we thought that, there was a bout of short covering which came in the banking stock, and that's what the trend looks changed now. Nifty, there's a long built-up trend, and Bank Nifty, we've seen a short covering trend. In fact, VIX also cooled off 14.2. Otherwise, it was heightened when we started the day today. The calls which were most active were 25,100, 25,000 exactly. There was some mild call writing, not much, but then 25,100 is the immediate resistance, what appears. And at the same time, the support happens to be at 24,800, 24,900, where the maximum of the put writing happened. So maybe in for a small range, or maybe index would consolidate here, but at least we did saw a short covering trend today.
Well, absolutely. A short covering trend is what we were keeping on our radar. But what else were we keeping on our radar? Bajaj Housing Finance IPO that is open for subscriptions. So should you be keeping it on your radar? Should you be looking at it? Let's also revisit ET Now's editor-in-chief Nikunj Dalmia's take on this then.
This is the first company from the Bajaj Group which is going public after 30 years. Well, it's available everywhere. So I will not say anything new here. But for me, what really matters is that what is the nature of the company? Are they growing? And do they have capability to really grow? Now, Bajaj Housing Finance is going public largely because of the liquidity requirement. But interestingly, Bajaj Housing Finance is not like a 35-year-old company. It is a HFC which does not have a business history of even 10 years. Within that 10 years, agreed that it was backed from Bajaj Group. It has managed to become the second largest HFC. And within that, you essentially are growing at 25%, which is higher than the industry average, and your cost of advantage of capital is going to be large. So let's understand first, the mega trend, housing finance will continue to grow. B, they are not in the so-called low-cost housing. They're very focused in where they want to lend, how they want to lend. C, being from Bajaj Group, the pedigree, the risk management, everything is great. And fourth, I think there is going to be a massive scarcity premium. When the Jindal Group, when Jindal Ports went public, it got a massive response. When Tata Tech went public, it got a massive response. It's not a very large issue, 3,500 crore. It's even lower than a lot of the small IPO. It's lower than a lot of big IPOs which have gone public right now. So I think this is going to get what could be called as a table thumping response, and then the price discovery starts after that. Because in the HFC space, the price discovery is very well done, and the price discovery for a leader like HDFC Limited was also done, and similarly even smaller spaces like Apatas and others are also done. I don't expect that after a bumper listing, it is going to be a multi-bagger in making. This is going to be a steady compounder. HFCs are steady compounder. If you apply in the IPO, don't sell on the IPO pop. This is a stock you want to hold for many years now. And if the listing is somewhat decent, because the price discovery will happen in and around the market leaders with a slight amount of premium, if you buy it for next couple of years also, this could be really a compounding, compounder. So it's a stock you want to buy for the pedigree, for the mega trend, for the quality of book they have, and for the advantage they have of the Bajaj brand. Don't buy this issue for the IPO pop. Just like I'm having a sore throat right now, you may have a sore throat if you're buying it for the IPO pop.
Okay, so but then it's a very good, it can be a very good compounder. This is what Nikunj just spoke about, and the way maybe housing finance space is very competitive, but at least it's expanding at a good pace. All right, thanks Nikunj for that take. But there were many other stocks which were buzzing in the trade today. Gaurav is here joining us with a list of those stocks. Gaurav, over to you.
Well, yes. First, let's talk about AU Small Finance Bank, because there have been many positive news flows about this bank, and the new one being that the company has now formed a strategic partnership with United India Insurance to provide wide range of general insurance solution to the customers. Now, with this partnership, they will also leverage the branch network of around more than 1,000 touch points of United India Insurance, and that is why this stock was up in trade today. Next, let's talk about Shriram Finance, because UBS recently upped the target price to 3,850 rupees, because what they believe is that the synergies from the merger will keep aiding growth for the company, and at the same time asset quality will remain stable, and as a result we saw this stock was also up in trade today. Next, let's talk about some pharma stocks, and first let's talk about Granules India, because US FDA recently concluded its inspection with 6 observations, and as a result we saw some pressure on this stock price. Next, let's talk about Suven Pharma, because here also US FDA concluded its inspection in a facility which is situated in Hyderabad, and the company has received ERR with voluntary action indicated, and as a result we saw some pressure in this stock as well. Lastly, let's also watch out for JSW Infra, because board has approved now the capex plan of 2,359 crore rupees, and with this capex plan we may see addition of the capacity of more than 34 MTPA in 2 of its port locations, and as a result we saw some upside in this stock as well. So definitely watching out on all these counters on the back of the news flow that we have received today.
Alright, then with that, we're completely out of time on this edition of Your Trades on ET Now. For me, Shriyansi Singh, Priyanka Uppal, as well as the entire team that put this show together, thank you so much for tuning in.